So, what's it going to take to buy a home in Canada by 2026? Let's dive in.
For a lot of us, it all boils down to one huge question.
And that big question is often this: do you stay in a big hub or move for affordability?
And wow, look at that price gap. We're talking over $1 million for an average Toronto home.
That massive price difference means your budget gets you something completely different in each city.
Right. It's not just about square footage. It's about finding a payment that doesn't control your life.
Okay, so how do lenders even figure out how much you can borrow? Let's get into it.
It all comes down to something called the total debt service ratio. This number is absolutely key.
So let's see how this plays out. How much does a student loan really hurt your chances?
All right, say you have $110K income and zero debt. Your max purchase price is right around here.
But now, add that loan, and bam, your buying power drops by almost 30 grand.
And it's not just the mortgage, right? There's a whole other chunk of cash you got to plan for.
We're talking about closing costs. You need to set aside an extra 1.5 to 4%.
That covers things like legal fees and inspections. But the big one for a lot of people? Land transfer tax.
And this is a huge difference. In Toronto, you could be paying over 30 grand. In Calgary, zero.
On top of all this, the rules of the game are actually changing. The government just shook things up.
Basically, these 2024 changes could mean lower monthly payments and an easier time when you renew.
Okay, so what does all this actually mean for you, the homebuyer? Let's pull it all together.
First off, you'll hear the term benchmark price a lot. It's just a way to compare apples to apples.
And you can see here, the price differences across Canada are massive, not just in our example.
So when it comes down to it, your personal affordability is really a mix of these 4 things. And figuring out your specific numbers, well, that's your first step to getting those keys.